The Department of Justice and the Securities and Exchange Commission are both investigating the collapse of Silicon Valley Bank.
A source familiar with the investigations says that they are still in their primary stages, but hint at one focus being executives' action prior to the failure.
This comes as shares of Credit Suisse fell as low as 30%, dragging international markets with it. The Saudi National Bank, which is the biggest investor in Credit Suisse, says it would not provide any more funding.
For more now, we want to bring in CBS News Chief Foreign Affairs Correspondent and Face the Nation moderator, Margaret Brennan. Hey, Margaret. So European markets have closed. U.S. markets are down sharply. Only a few hours left. Yesterday's gains erased. So what's happening today, and what does it mean internationally for the stability of worldwide markets?
Well, this is a global financial system, and so there are shockwaves when something happens to a bank as large as Credit Suisse, which you just referenced there. So we are no longer just talking about issues contained to two banks here in the United States, Signature and SVB. You are looking at that question of whether there is contagion to the broader banking system, and there's questions about global stability. Markets don't like uncertainty. They're trying to price the level of risk right now. So today, when you heard from Credit Suisse, not only that they found problems with their own financial accounting, but that their largest investor, Saudi National, wasn't willing to pump in more cash at this point. That caused real concern because unlike those two smaller banks, Signature and SVB, Credit Suisse is a powerhouse. It's the second largest bank in Switzerland. It is huge, and it could have implications for the credit market. So now we're not just talking about technology. You're not just talking about smaller regional banks in the United States. Now you're talking about concern about the banking system writ large. That is why the Treasury Department here in Washington said that they had been in touch with their counterparts overseas, and they are monitoring the situation very carefully. The other complication here that financial markets are reacting to is this economic uncertainty. Remember, we're in this really delicate moment of the Federal Reserve trying to get inflation under control. They have raised rates 8 times in 1 year. It typically takes a system 6 to 12 months to absorb the impact from one rate hike. We've had 8. And so that is why we are really in kind of uncharted territory here in so many ways. And there are now questions about what the Federal Reserve will be able to do when they meet next week. Will they have to put a pause on the interest rate hikes? Will they now have to refocus on just shoring up global stability? Markets don't like this kind of uncertainty, and they're trying to figure out how to prepare for it.
We see that, certainly.
On Silicon Valley Bank, there are questions about whether there was insider trading happening, but the New York Times reports that some executives sold stock as part of a quote-unquote insider selling plan. Can you explain, Margaret, what that means and how it's different from insider trading?
What I think you're talking about is something that Ro Khanna, the congressman from Silicon Valley, also brought up on Face the Nation on Sunday when he said he wanted some of these stock trades to be looked into and big sales of shares of stock, including by its CEO. And he raised the possibility, though, that this may have been part of a pre-planned stock sale, part of something that is already arranged in advance with the SEC, and there are filings, SEC, the regulators here in the U.S., and there are filings so that it is not necessarily quote unquote insider trading, which suggests that it is done either maliciously or based on information that someone has direct access to in a way that conflicts with their responsibilities as executive. But we'll hear more on this front. We also know that the Department of Justice is looking into what happened here. But when it comes to the financial markets, they are also paying attention and will pay attention to a report that's coming down May the 1st from the Federal Reserve. Remember that the Federal Reserve is politically independent. It is the entity that is charged with trying to keep financial stability there. And they're going to be taking a very hard look at what happened out in San Francisco area and the Silicon Valley region. How was this level of concentrated risk allowed to develop without regulators within the Federal Reserve System saying that this could be a problem. SVB had such concentrated risk within the technology sector, and this seems to have been a surprise to some regulators, even though there were people as far back as January in the financial system raising questions there. So I would watch for that May 1st report, but then, as you indicated, the Justice Department has an investigation. I'm sure the SEC as well. And of course, there are the lawmakers who can write their own laws, but in this environment of a divided Congress are unlikely to come out with new regulation. But certainly at the federal level, there'll be a lot of scrutiny of how regulators miss this.
All right, Margaret Brennan in Washington. Margaret, thank you.
Thank you.